So I'd like to show you a video from Investopedia on dollar cost averaging.
Dollar cost averaging is a more conservative approach to investing than simply spending all your money on securities at once. This technique allows investors to commit to a fixed dollar amount of a particular investment on a regular schedule, regardless of the share price. More shares will be bought when prices are lower, and fewer shares will be bought when prices are higher, resulting in a lower average cost per share. Dollar cost averaging reduces risks by allowing investors to ease into the market over time. For example, Chris buys $200 worth of stock in Billy Bob's restaurants each month for 4 months. In January, the value of the shares drops to $50 each, so he buys 4. In February, the stock is worth $40, so Chris buys 5. In March and April, he buys 8 shares of Billy Bob's, which dropped in price to $25. Overall, Chris purchased 25 shares at an average price of $32. If he had invested all of his money at the same time, then he would have only bought 16 for an average price of $50 per share.
So I hope you understand that that's a good way of easing into the market by consistently investing in any given share or mutual fund for $100 or in this instance $200 a month. It is extremely tough to try to time the market and find out when is a good time to buy stocks and mutual funds. But on a consistent basis, if you're doing $200 a month as Chris was doing, maybe he was doing it in the middle of the month or the first of the month or even the end of the month, at least he's getting $200 in the market every single month at every single specific time. And he's buying shares, whether they're high and low, on a consistent basis. And that's the best way to get into the market as a beginner in investing. Before we wrap up this class on investing, I just want to tell you how I got started into at least listening about the word investing. I didn't really know anything about it, but I was a young E5 in the early 1990s, and one of my sergeants asked me if I was interested in investing. And he said, for $400, I can get into a company called Berkshire Hathaway. I was a young E5, like I said, my first wife wasn't working, and I didn't even have $400 to my name. I might have had $40 to my name, but I didn't invest. I didn't do it, but he told me all about it. And in ways I wish I would have put some money together or saved some money, but I didn't. And by me blowing this opportunity, today's price is $347,000. So that is a lesson learned that I didn't jump on investing at the time, because I couldn't afford it, but I probably could have saved $400 if I really could. Again, just to give you some background, this is the ticker symbol here of this company. And then you see the price here, and then you can go down. In our next class, we're going to talk about how what this chart means. Thank you for watching, and I hope you learned some stuff. Talk to you later.